Testing, testing, testing. JB here, September 24th, 2021. Just going to be really quick, boring session, at least for the stocks I'm looking at. And some of the names that had some promise this morning are starting to fade. So it looks like it's going to be a frustrating end to the week. But first, I'll talk about Lending Tree. I had that on the watch list for I guess, probably for the last 2 or 3 weeks. It's a name that's had some big bounces before after sell-offs. It's a very divisive name. It has a high short interest. I think as of right now, it's a 15% short interest. It's a $2 billion company. It does $1 billion in revenues. Let me see if I get the exact numbers. $2.1 billion company, $985 million in revenues. And that some of that has to do with the slowdown COVID last year. I guess there was, maybe not as folks wasn't using their platform as much, but it seems like that has things have gone back to normal. They're past pre-COVID levels, and I just think it's a story that has an opportunity for a bounce. I'm not saying it's going to go back up to $400, but I do think there's an opportunity for 180, 190 in the coming weeks if the market somewhat cooperates. We don't have a crazy bear market or a huge correction. The company also, no debt, $200 million in cash. So pretty much 10% of the valuation is in cash. They're also doing some hiring, staffing up because they want to continue to drive initiatives. They do insurance search as well. So insurance is hot, of course. My goose head. Analyst just came on at 8, or that's what happened. It's just Alliance Global Partners, $14 from $9. Maybe that's why the spike just happened on 8. So interesting stories. That's kind of the thought process behind it. And the calls there, and I was watching it melt after its last earnings report. It actually spiked to I think to 220, and then it just sold off 220, then to 200, then to 180, then to 170, and then it was sitting in the 170 range. I said, "Wow, this looks interesting." I was going to add calls, continue to sit on my hands, and then finally this past week, it looks like a decent amount of volume on this bottom. So would love to see it stay over 160 here. It's already in the last hour, it dropped from 160.55 down to 156.94. Have plenty of time in the October strikes. I think if the market cooperates, that's going to be into the 180s in the coming week or two, and then possibly higher. So that's Lending Tree. BHC, I'm really not going to talk too much about BHC. Again, yesterday, it did what it did the day before, where it ramps higher, and then the premiums don't go up in lockstep with the stock price. So very, very frustrating. You watch it go up. I got the calls when it was 27 and change. It goes up to 29 and change, and the October strikes are still right around the same price. Not going to sit there and try and micromanage that position, so I went and locked it before I lose. Before I take a position that was winning, and it turns into a losing position. At some point, I'll revisit. Maybe as it gets closer towards the end of the year, they're going to have that spin-off of their Bausch and Lomb category. That might put a bid in the stock. And I think at some point, there was a JP Morgan analyst on Monday reiterating their buy rating, and some of it was the sum of the parts valuation of BHC puts it into the $40 and higher range. And that's kind of the bull case why they have the buy rating. So I think down here, now it's down to $28 today, $28.75 after a gap at $29.40. So I think it's probably mid-30s in the coming weeks. So I'll continue to look for opportunities to play BHC. But at the same token, I'm not going to sit there and watch the premiums evaporate. When the stock stays flat, and then when it goes up, the premiums stay the same. It's just not a fun kind of trade. So that's BHC. The JYNT, I don't know if I posted a chart already. I think I did. The JYNT, pretty much Monday, it gave back all the gains from the previous week. Then Tuesday, Wednesday, Thursday, it recouped those losses, and then was actually green on the week. And then today it's doing the same thing it did on Monday. Very frustrating. No news, no catalysts. The more I start looking at the chart, you look what happened on this last earnings report. It had the big gap up and run, and then it kind of stayed flat until the next catalyst, which was the previous earnings report, and then the next catalyst was this current earnings report. I'm hoping it doesn't take another earnings report for this to get into the 120s and 130s. I'm definitely not going to add anything to my 130 strikes. I'm looking at the 125s, but I'll just wait for now. Maybe find some footing next week. So that's the JYNT. BlackRock, I was watching after Wednesday's Fed meeting. You had Powell kind of able to quell concerns around the taper and saying, like what he's always said, that interest rates and taper are going to be independent of each other. So kind of gave folks a little reason to get back into stocks. So the market rally to the end of Wednesday, and then Thursday the market rallied. And I was looking at the financials. I thought BlackRock is off, or nearly over $100 off its highs just this month. That doesn't mean it's going back, to 970, 980. But I think there's an opportunity there. I put it on the watch list yesterday. It's one of my favorite financial names. So at some point, I don't know if I was looking today, but I'll probably wait till Monday, maybe to look to get some calls to play for. I'm moving to 890, 895 range next week. That's BlackRock. And then here's the S&P. Thankfully, if there's one good thing about today, the S&P is back over the 50-day moving average. So if that holds up, maybe bodes well going into the next earnings season. Earnings doesn't. I think it's October 14th is the start of the next earnings season. The banks, Netflix, I think is October 17th. So we have kind of a quiet period. Of course, we have this the China real estate market roiling global equities, right? This situation that everybody becomes this China real estate expert, especially everybody on fintech. But was it yesterday morning when I talked about Glencore? If anybody remembers Glencore, similar situation. It was supposed to be this black swan that was going to cause this contagion event that all these other folks who were holding their debt were going to be in trouble. There'll be margin calls, blah blah, and that never really came to fruition. Same with Deutsche Bank, right? Deutsche Bank was supposed to be part of that too, and that was some of it. And there, you had Zero Hedge would write these articles, fear mongering like they always do, and then that never came to fruition. Hey, one of these do at some point, right? That's what we always say. You never know which one it is, but usually the one you don't know about is the one that does it. Some other names. Let's see here. So hopefully JYNT gets back over $100 into the end of the day. And Tree, I'd love to see Tree back over 160. I was looking at Netflix this morning, right? So you have Amazon's launching some streaming in India, and then you have this report. Disney Plus is at what I guess the Goldman Spectacular Symposium. What are they at? Let's see. Not Disney Plus. Was that yesterday, day before? Maybe it's 2 days ago. So Disney Plus, a little concern around their sub ads. And then this morning you have Peacock churn rate is the highest in at least 12 months. Oh, this is from Variety. So data providers from Variety suggest that Disney Plus and Comcast saw their highest churn in August in at least 12 months. Who knows? I wasn't trying to read too much into it, but if the market was going to have some weakness, for the first time in, I can't remember, I was going to look to nibble some Netflix puts. A nice bounce off of 583. I don't know how everybody else is with streaming, and some of the better trades I make are based on personal experiences, right? And I used to talk about SodaStream before it got acquired. Amazon. I mean, all these companies many years ago when I used to talk about Amazon on the rants. A lot of people didn't use Amazon, know about it. I mean, the stock was like $200. And they started doing their free delivery, and everybody said that's the end of Amazon. They're gonna, how they're gonna be able to subsidize this. Nobody talked about their Amazon Web Services. And then we see where that went. So I'm not saying the same thing here, but personal experience with Netflix is I always used it. I wrote pieces on it on the OM site back when it was pre-split, whatever it was, $100 and $200, then all the way up to $1,000. Then it split. What did it do? A 7-for-1 split, and now it's back up here at 588. But with all these things, all these providers out there, all these options for streaming, including the Peacock, Disney Plus, Hulu, Amazon Prime, HBO, HBO Max, and then all these other a la cartes too, where you have FX. They all have their little thing. At some point there's just oversaturation. And the good thing with Netflix that they've been doing is they're creating content that keeps people engaged with their platform and their service. You don't get the choice between canceling one or the other based on the content. But I think at some point, something I'll be looking at in the coming months. I think that's it, folks. I'll try to get back on later. Not really much else to talk about. I was going to be cautious over the weekend. I'm sure there's going to be more headlines. China's going to kind of let this situation play out over the weekend, I'm sure. And there'll be fear-mongering headlines all weekend. That this will be like the Lehman Brothers moment or whatever it's going to be. Let's have a great day. Have a nice weekend, folks. I'll be back. Rock and roll.